Okay. So 1 minute more, please. I believe that it's working already. Manage participants. So participants are here. I'm just adding some participants. So we'll start maybe in 2-3 minutes. Just I'll be adding the new participants. So I have a question if the voice, if you hear me properly, because last time there were some people saying that it was not enough loud. So if something goes wrong, just inform me, okay? And I will try to make the microphone a bit louder. So I see here a chat. Oh, fine. Mr. John is writing that it's the voice is okay. So that's nice. There are still some people coming, attending to our meeting. So let's maybe wait for one person more, and then we will start and continue during the session. I just marked that all the participants are joining us. One person is waiting. I believe, yeah, he's already in. That's nice. Make voice loud. Yeah, I'm trying to, I made it as loud as possible. I'll even add it here. Okay, so let's start with our lessons, or however we call it. Maybe let's call it a webinar. I hope that everything is okay. So today we'll speak about triangles. You know, triangle is a well-known pattern in trading. But of course, what's even more important for us is that the triangles in technical analysis has special possibilities. We have special opportunities to trade if we are able to see that on a chart there's a triangle, and if we spot such a triangle, it gives us a big chance to trade, to make a good, interesting trade. So let's start with the session. I'll hide the cameras and let's go on. So it's me. I'll be hosting this seminar. I hope that you'll find it interesting. If there will be any questions, I would like to ask you after the session. Okay, so if you after the session, we will make a 5, maybe 10 minutes part when we can speak about what I was showing to you. Of course, as you know, all what we are speaking about, those are some ideas, some new some knowledge, which I would have some education with which I would like to show you to make you a better trader. That's why you must know that trading is a risky business. You can lose all your capital you invest. So better is to get some knowledge before starting trading on the real money. But of course, you must remember that the CCI traders, they offer a bonus for those who will open an account. So let's say that if you open an account, you have this $50 free bonus just to start trading, to learn trading. So it's much easier to start if they propose you some money on the beginning. And of course, there's a 50% bonus for traders who will make their first deposit or replenish an account. Of course, multi-account manager services are available. If you are interested in this bonus, please, sorry, apply. I will just add this people here. If you are interested in this bonus, just apply by sending a mail to support@cctraders.com. So this is what I wanted to say on the beginning. Now let's go to the main subject, triangle patterns in technical analysis. What I mean triangle patterns is very simple. I believe in after 1 hour of our meeting, you will understand much more about the market than you know at the moment. Or if you're an experienced trader, maybe you'll just have a kind of a reminder how it works. So during this lecture, you will learn what is a triangle pattern in technical analysis, what kind of triangle patterns we can find on the charts, how to identify what type of triangle at the moment we have on the chart, and of course, what's the most important, how can we benefit from a breakout from such a triangle? And when we see there's a breakout, there are, generally speaking, 2 types of breakouts, and both of those I will show you, and I will show you what is the plan, how to trade such a breakout after we are able to identify what kind of breakout we had. So just going further, what means that there's a triangle on a pattern, on a chart? The triangle, it's a volatility contraction pattern. It means that volatility is lower and lower, and it means that the range of the price is smaller and smaller, and it's very likely that the market will break out soon. Triangles are bilateral patterns, what means that the breakout from a triangle can occur in both directions. What I mean both directions, it means well, they can break up and make the price grow, or they can break down and make the price fall. So let's say just at the beginning, it's only a scheme of 3 types of triangles we will discuss today. So the first type is an ascending triangle. Ascending means a growing triangle. Some call such triangles a bullish triangle. What means that the price has the highs are at the same level, but the lows are going higher and higher. So we have a low, a higher low, higher low, higher low. But the maximums are at the same level. So this is a typical triangle. We call it an ascending triangle. Later on, I will show you such samples on real charts, on real market. Even actually, there are some triangles seen on the markets, and we can benefit in close future on those patterns. Here we have a descending triangle. As you see, it's just an opposite to the ascending. The difference is that the bottom is flat, and here is a slope. So we can say that those highs are lower and lower and lower, but the bottom is on the same level. And the third type of triangle is a symmetrical triangle. That's the one you see here, that we have the highs are lower and low, and the minimums are higher and higher. So the difference is, you can see at the first sight, flat top and a slope, flat bottom, and both are both are not horizontal lines. So this is, let's say, a scheme, a very simple one. But now let's go to a much more, sorry, I have some participants more here. I will admit all, so they can join us. So coming back to these 3 patterns: ascending, descending, symmetrical. And now let's go to, as I mentioned, bilateral patterns means that the breakout can happen either to the top, either to the low. The direction is not known. As long as we don't see that they break out, we cannot say too much about what that is the direction they will break out. So the question, this is a typical chart. I'm using black and white, but of course on the C platform you can see that there are greens and green and red. Green, sorry. Green means that the market is growing. Red is that market is falling. I have white. This is market is growing. Black, the market is falling. This is. It doesn't matter what color we have on the charts. It's every one of us would like to have what he likes more. I am using black and white, but some people are using red and green, maybe yellow. I don't know. The main thing is that the white is bullish, growing, black is falling. And the question is, do you see any triangle here? You know, on the first sight, you can say, it's difficult to find a triangle here. Maybe some of you already see this triangle. Maybe some of you just wonder, when can I find a triangle? And I will say you, yes, there is a triangle, and the triangle is here. So you can see that a clear chart shows us no triangle, but when we draw a line, sorry, I need to add another person. You know, we are adding manually because last time we had a lot of problems with some hackers. They were spoiling our meeting. So now I am adding the participants manually. That's because of the problems we had last time. You know, there are a lot of bad people around just waiting to spoil our business and our time. So as you see, here's the beginning and here's what the reality. And now, just to describe this triangle in a proper way, I need to show you another picture. This is the one here. This is how price behaves in a triangle. The price behaves this way, that we have this letter low, it means it's a lowest level of the price. HL means higher low, higher low. Higher low means that this low is higher than the one here, and this low is higher than the one here. So we see that we have an interesting situation here. And it's a typical behavior for a symmetrical triangle. Symmetrical triangle means that we have the both lines are coming to one end, and this is falling down. This is a growing one. So remember, symmetrical triangle is a triangle where we have lower highs and lower lows. This is a low which is higher than the one before. This low is higher than the one before, and here we have a high, we have a lower high, and then comes the moment when we need to, when we have a breakout. As you see, this line here was broken. So this line here we call a support of a triangle, and this is called a resistance of a triangle. Maybe I'll write it down here. Sorry. I need to change to my pen and open my pen. So my pen will be probably here. Oh, no, sorry. Where can I change it? I need to change for a moment to this picture, and I will need to put on my pen where I can find it. Sorry, I cannot find it. One moment, please, one moment. Where is the chart here? I believe that this should show us the pen. Oh, maybe I should close those things for a moment. And here's my pen, sorry. One moment. Okay, my pen is here. That's nice, that's nice. Okay, and now I need one moment, please. Okay, so we are coming back to our, okay. Sorry. Share screen. This one, okay. Now it's okay. So once more, this is a typical triangle, and if we want to give names to all those lines, we can say that this line here, this blue line here, is called support of a triangle, okay? And this line here is a resistance of a triangle. So later on, when I say support of a triangle, I say that I mean this line here. And when I say resistance of a triangle, it means that I speak about this line, okay? Now let's go further. So this was a typical symmetrical triangle. So once more, we return, sorry. On the chat. We are not seeing your mouse. I hope now it's working. Is it okay? Okay, I understand now, but now it should start working. Okay, so once more, this is the whole idea of a symmetrical triangle. Now we can go to a sample from a real market, and this is the one. Symmetrical triangle. We have a high, we have a lower high. We have a low, we have a higher low. So at the moment, we can say that we have a symmetrical triangle. This is, sorry, this is a pair, New Zealand dollar to American dollar. Typical chart, price chart. It's from a year ago, probably, but still we have such things happening also actually. So we have a high, lower high, low, higher low. This is a triangle. Of course, on the first sight, we can say it's not a triangle, but yes, it is. And it's a symmetrical triangle. Okay, once more, someone is coming here. Okay. And here is something which we call a breakout. So the breakout is through the support of a triangle, because this is a resistance of a triangle support. The most important thing in those figures is that when we see such a sample, maybe not a sample, such a formation on the chart, we can prepare to make a good trade. And making a good trade means entering the market after we see a breakout. And this is the most important moment in the whole triangle. When we see that the triangle is building, we cannot say much about it where the market will break out. But when we see such a strong candle, we know that this breakdown happened. And later on, I will explain how to trade it, because you never know when the breakout will happen, because you would try to enter the market here, but the market reversed. So we need to wait for a confirmation. And how to find this confirmation, I will shortly show you. So this is a typical symmetrical triangle. Just let us shortly come back and start and repeat the situation here. We have three types of triangles. ascending, or some would say bullish or growing, descending, falling or bearish, and a symmetrical triangle. And now this was a symmetrical triangle straight from the charts. And what can we say about another triangle? Another triangle is an ascending triangle. The one which I mentioned at the beginning, a growing triangle, or let's say a bullish triangle. Bullish triangle, sorry, once again. I hope that it's no one who will, I hope those people won't spoil our session. Now it's going much better than the last we had on Monday. So this is another triangle. Of course, at the first sight, we would say it's just a normal situation on the market. It's not a triangle. Yes, it is a triangle. And you can see that we have a flat resistance of the triangle because the high and this high, they are nearly on the same level. And on the support, we have a low, higher low, higher low. So this is a typical ascending triangle. And this triangle, what is written just on the top of this picture, this type of triangle occurs when there's a resistance level. This is the resistance level. And a slope of higher lows. So you see the lows are higher and higher. And then the market breaks out. And once again, it's very important for us the moment when they break out, because there's a chance to get some nice pips in a very quick way. We can get it very fast. So it's good to prepare a trade, a pending order, a buy order here, and just when the market breaks it, it's triggered and the market pushes out. Of course, we can say that we have here another small triangle, just another. What I mean another triangle, I mean this moment here. You can see that we have a triangle here also. And it was broken out, but this time it failed, it went down. But this triangle is not so clear as the one here. That's why, in my opinion, this candle cannot be, this triangle cannot be used for trading. Now let's go to another type, or maybe let's show you how such triangles, those ascending triangles, appear on charts. Because this is, let's say, a very nice sample, but let's go to a real chart and see how they are built in the real market. So here we have this symmetrical triangle I was talking about a moment ago when I was discussing symmetrical triangle. And here we have the ascending triangle, the one which I called a bullish triangle or a growing triangle, which shows us, sorry, I have some news here. Okay. All those people are late. You should start, we started at 4 o'clock and you are still coming late and late. Okay. So once more, here we have this breakout from a symmetrical triangle, and here we have a breakout from ascending triangle. There's a difference when we take a look at this two triangles, because here we have a very dynamic breakout, and here we have a, I would call it a subdued breakout, or I would call it a lazy one. The market couldn't decide where should they go. Should we go up or should we go down? There was no decision here. And these two types of breakouts we will discuss a bit later, but those two types are very specific. They are very often seen on markets, on financial markets, and it's very important to see this, to define what kind of breakout we have, and then trade properly according to the to the way they broke out. So I will call it, this is a dynamic breakout, and this is a normal breakout. I would say a subdued breakout. And of course, this is, so you see on the picture at the moment, two types of triangles, a symmetrical one and an ascending one. And still we didn't discuss another one, which is a descending triangle. So the difference between descending triangle and ascending is that we should find a triangle where we have where the price is falling and the bottom is flat. And we have such a sample here. So this is a typical descending triangle. So as you probably guessed, this is just an opposite to ascending triangle. And here again, we have a high, we have a lower high. This red line is a resistance of this triangle. And this green line is a support of a triangle, because we see 2 points giving us a line. It's a horizontal line. So we can say we have a very proper descending triangle. And this is a triangle which is at the moment okay. So this is a triangle which we can find actually on the on our charts, because this is from the end of April this year. Now we have May, and we can see later on the live trading charts how the market behaved. Sorry, I have some information from here. Okay. So now we can say that we saw 3 types of triangles, and 3 types of triangles will be shown later on our live trading part, because after this, say, theoretical part, we will go to the practical part. So we'll go to actual trades, and we will see how can we find them actually yesterday, tomorrow, today, what can happen. So what's important in a descending triangle? We have this let's say string of lower highs, and in the same time we have support which cannot be broken. And this support of the triangle shows us that we have a descending triangle. Some say that it's just another type of triangle. For some of the traders say that it's not important what kind of a triangle we have. More important is the way they break out from it. And I say, yes, they are right. They are right. But when we look in the statistics, most triangles from where, when we see a dynamic move up, and then the price begins to behave like this, most breakouts from such triangles are to the top. Why? Because the trend is up, and this is a kind of a consolidation before another move up. So I would say in case of such triangles, we can say that about 70% of breakouts are through the top. And let's say about 30% is down. But believe me, you mustn't expect that all the breakouts will be through the top, because you always take the risk that that you will have the 30% sample. And so that's why for me, more important is to wait for the breakout and enter the market after the breakout is done. So you can plan that the market will break to this resistance, but it's better to wait for the market to show a sign of this, that they want to break up, or If they are breaking down, enter after the market is over those lines. So that's a very important moment. You need to have this on your mind, that the fact that about 70% of breakouts are to the top, it doesn't mean that you have a big chance trading it up. Better wait for the breakout and then enter. Here was a sample that we had before. We had also a triangle here, you see. I'll maybe clean those lines. Okay, you see, we had a triangle here also, and this triangle broke to the top. But now they returned back. Will they try to break to the top? We don't know. For me, most important this moment when they break it. If they break the support, then it's a big chance that they will follow down. When they break to the top, there's a big chance they will follow up. But at the moment, we cannot say too much about where the price will go. So what's important in trading is some more chat. Once more, but what once more? I don't know what to say once more. Just coming back to the subject. We had one triangle here. It nicely broke out. You see, they tried to retest this moment when they entered. They did it, and they pushed higher. So if you see a breakout, you can start thinking, okay, for some time the price will grow, and for that time I'm ready to go long, to buy. But when the price is again at the level, it can bounce up, it can break through. So you need to be patient enough to see the market move, make the first step. Either they will break down, either up, and then you join the move, not before the breaking. Because as you see, they tried to break and they didn't manage to break it. And if you would go short here, if you would sell, you will be now losing. Now. So this is the situation on descending triangle. Sorry. So now let's go to the ways the market is breaking from the triangles, and let's take a look. Is triangle analysis related to trend analysis? Yes, because we always should trade with a trend. It means that if the price came from the bottom, so it was a strongly bullish, the chance that they will break to the top is of course higher, because the market likes to trade with a trend. So anyway, it's important to remember where is the trend, which direction the trend is entering. Okay, joining. I hope that I'm making a proper move. Okay, so now as I mentioned, there are different types of breakouts, and what you asked at the moment is the triangle analysis related to trend analysis. Yes, it is, and I will show you just now that when we will be identifying the ways they break out from a triangle, then we need to look at the trend. So I just remove those lines. So it's as I mentioned, it's very important to evaluate the situation after the breakout from the formation in order to join the movement at the right time and in the right direction. So let's find now how can we enter the markets in a proper way after identifying what kind of breakout from a triangle we have. And there are two techniques. I will show you those techniques. I will show you the techniques. The one is called the first pullback, and the second is called the retest. Those are, it looks nearly the same, but it's not the same. All depends on the dynamics in which, how the market is breaking from the triangle. So there are common mistakes of traders, not only and those newbies, those new traders, but also those experienced traders. The biggest problem is with us that we are not patient enough. We would like to chase the price. When we see there's a breakout, oh, let's join, let's join. No, just always take a minute, watch the price and ask your question, ask and answer yourself, is it a good moment to chase the market? Maybe it's better for the market to return to my levels and then I will enter the market. Because the problem is that chasing a breakout, it means that you are joining it very late, and there's a chance, a big chance that the market, at the moment when you will start entering the market, the market will make a retracement, and you are left alone somewhere on the bottom of the move. What I mean, all is here on this picture. As I mentioned, there are two types of breakouts, and in this case, we see a breakout which is a dynamic breakout. And in this case, I advise you not to enter together with the market. You need to wait for this move up, because if you are not waiting for this pullback, then you are left somewhere alone here. And I will just describe, how it works. Here, here the big boys started selling. Sorry. The market was moving in a triangle. No doubt that there was a triangle, because I can show you that there was a triangle like this, like this, like this, like this, and the market broke down. Sorry, there's something new here, more on the chat, yes. Okay, you asking me if it's applicable to all time frames. Yes, it is applicable to all time frames, but believe me, the lower time frame we trade, the range of the move is smaller. It's obvious. If you are trading on a 5-minute chart, then the move will be much will have such a much lower range. I will come back to this, because when we'll go to the real charts, I will show you on the real charts triangles on daily time frames as well as on 5 minutes. But of course, the range is much smaller, and I would say that trading on low time frames gives us less chances to be on time, because when something happens on a 5-minute chart, if you are 10 minutes too late, you are just too late. And but if you are trading on a, let's say, 4-hour chart or daily chart, you have a whole day to prepare to such a trade. This is the difference. Trading on 5-minute charts needs, really, you need to pay a lot of attention to what's happening on the charts. And you have really not much time to enter the market. You need to do it very quickly. So it's a type of a scalping. But if something like this happens on a 1-hour chart, you already have more time. And the best are, of course, 4-hour time frames and daily. We'll come on. Oh, so there are some more participants. Okay, I'm adding. You know, all of you are late. You should have come at 4 o'clock, not at 40 minutes after we started the session. So you lost the main part of this meeting, but it's, of course, your problem. So maybe you'll get the recording, then you can see what we were talking about on the beginning, because we started with some important things. So coming back to the situation here, this is a typical dynamic breakout, and trying to go short here is not a good idea, because at this moment, if you would add let's say that you saw that nice dynamic move. Remember, this is a daily candle, so the whole day the market was falling, and you say, okay, I'm gonna enter. Yes. We need we had to secure this session, because there was a lot of hackers spoiling our first meeting we had on Monday, the first short webinar, and they spoiled our meeting now. Yes, of course, no problem. Let's, of course. So if there's some people coming later, no problem, I'll add them, of course. So once more, we have two types of breakout. First pullback, retest. And now we are trying to yeah, of course. Yes, of course. So if you see a dynamic breakout, don't join this move, because we call it catching falling knives. You will get hurt, because let's say that the day ended with such a long candle. So you would say in the middle of the day, okay, I will add my short here. I will go short, I will make a sell. And then you see there's a candle which shows us that the smart money, those who are starting selling here, they are taking their profit. They are taking the profit, so the market starts to move up. And then the bulls see that the smart money already made their profit, and they push the price up. The price comes to the levels where they broke out from the triangle. And this is the best moment to enter. Not here. Forget about chasing the market. Don't chase the market. Sometimes the market will run away and it's too late to enter. But don't chase the market. When you see that the market is climbing back and is closer and closer to this level where they broke out, then you can start entering. Maybe you can start entering here, maybe here. It depends on you. Nobody will tell you where you should enter. So this first type of breakout which you ask, Mr. Joseph, it's this dynamic breakout. And this dynamic breakout, if you see something like this and you didn't enter here, don't chase the market. Forget about it. Forex gives a lot of other opportunities. If you would enter here, at this moment you would be on a big loss, and probably you would close your trades on a minus. That's why it's much better to enter the market after a pullback. This is a pullback, okay? This is a typical pullback because there was no retest. A retest means that the price hits something from the top and then hits from the bottom. This is a retest. And here we have the retest much later. Those are daily candles. And daily candles means that it took 2 weeks before the market came back. But of course, when we are trading on daily charts, if we are trading on other, if we are trading on other time frames, lower time frame, then the problem is not so big because it takes maybe 1-2 days if we trade on a 1 hour time frame. This is a daily time frame. I trade on daily and 4 hour only. So this is how it looks like. So this type of a breakout we call a dynamic breakout, and we enter after a pullback, not faster. Don't catch the falling knives. Don't get into the market when you see such a long candle and you didn't enter here, forget it. Wait for a pullback. If you see a pullback, then you can enter a trade. And now this is the first type of breakout. And I don't like those breakouts because they always they're magneting the market. Oh, it's such a nice move. Let's join. Let's join. No, no, must be very careful. Forget about entering the market. But there's another breakout which I like much more and which I like to trade because this takes a lot of time for a pullback. Not always such a pullback will happen. That's the problem also. And another type of breakout which I would like to show you is, I call it a subdued, or maybe not nicely, I call it a lazy breakout. And this is the breakout we see here. See, the difference is obvious when we take a look. Here we see a big breaking candle. And here we see that the candle broke out, but the market didn't go directly down. And those types of breakouts, believe me, are the most effective ever because we have enough time to enter the market in a proper moment. And the proper moment, of course, is when the price is close to this broken support. Because if we call this, someone else came here. Sorry. Okay. So when we see this, and we know that this is called support of a triangle, because it didn't let the price to fall lower, so it was supporting the price from the bottom. And then after this support is broken, it becomes a resistance. Okay, so you must remember that a broken support becomes a resistance. And here is a perfect moment to enter. So when we see a dynamic move down and then a breakdown, from this moment on, we can enter safely a short or a sell order. Entering a sell order gives us a lot of chances to even add another trade. So we can make a pyramid of sell, 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 and close it somewhere in the bottom. What's most important in this type of breakout, as I mentioned, sorry, that we have this nice move up very quickly. After the breakout, we have a retest, and then the markets go down. So you see, there are two types of breakouts. This is a breakout which is not dynamic. You have few days to join it. You mustn't be in a hurry. And the best place to join is when the price is retesting this broken support of this triangle. Because, as you know, this is a triangle. This is an ascending triangle where the market was moving like this, like this, like this, like this, like this. So this is, maybe this move was not finished, but this absolutely yes. So when we see a triangle, we need to know what type of breakout we have. Because if we see that the breakout is not dynamic one, we have a lot of time to enter. That's why I prefer these types of breakouts. They give the biggest chance to get a lot of pips in a safe way. Why I mean a safe way? Because if you enter here, you see this was the candle which broke down. Next day, the price tried to push up, but those wicks here show us that there's no buyers here. Any price was good for the sellers to enter, and the market finished the day here because this is the end of the day, and that's why entering this is a very good idea, because our stop loss should be just over this candle which broke this support. So our stop loss is here, and our take profit can be here. Look, it's 1 to 7. So the risk to reward, the ratio is 1 to 7. It's perfect. And that's why I'm talking today about, I'm speaking about triangles, because they give wonderful opportunities to trade. And as you asked during the session, the time frame, the cursor is not moving. Now it should be moving. I believe now it's working. You know, as I mentioned, the triangle, is it ascending or is it descending, or is it asymmetrical? The breakout can happen in any direction. Of course, there is some percentage saying that ascending triangles break down, descending break to the top, and the symmetrical can break any direction. So when we come back to the pictures before for a moment, the one here, you see, usually I say that those triangles can break up or down, up or down, up or down. But generally speaking, there is a big chance that this triangle will break through the top, because the market is coming from the bottom, and this can break to the bottom because the market comes from here. But believe me, don't stick to this idea. Better be ready to enter the market after yeah, we'll come back to oil today, no problem. Regarding the commodities, yes, it's a continuation pattern in case of ascending triangle and descending. But believe me, those things lately has changed. It's a classical technical analysis, but the things are changed a bit. At the moment, it's really difficult to predict the direction, because many traders believe that descending will break down, the ascending will break the top. The market is fooling us. So believe me, it's much better to wait for the market to do the breakout and then enter, not before the breakout. Because if you expect the breakout, you can expect the breakout here and it doesn't happen. You expect the breakout here, it doesn't happen. So they will trick you 3 times before they make it what you want, and you lose a lot of money on those tricky movements. That's why wait for the breakout and then enter. So now let's go to a bit further. So I have a question, and I believe that we just finished. Someone here. Admit. Okay. So I would like to add one thing, one question, because we already know, yeah, that there are 2 types of breaking and entering: a first pullback or retest. Already saw this, okay. And once more, just to repeat it: dynamic breakout, don't enter, wait for the pullback to this broken support of the triangle. If there is a breakout which is not so dynamic, you can enter at the first contact, at the first retest. Because you see, here we had a very quick retest. Day after the breakout, they retested this support of the triangle. Here, they gave us no chance to enter. We need to wait 2 weeks for the market to come back. So if you see something like this, such a strong breakout, forget about it. Just put it on your watch list and check if the price is returning back to this broken support. If it returns, okay, then I enter. If not, forget it. In this case, you can trade even day after the breakout, you can enter the market. So this is the main difference. But I have a question, because is this a triangle? There's a question too. Is this a triangle? Does it, would this pattern pass as a triangle? Because as you know, the triangle, we have three types of triangle. We have an ascending triangle, a descending, and a symmetrical. So the question, is this a triangle? Yeah, I have someone here writing. You are writing yes. No, no, sorry, but this is not a triangle. It's not a triangle, because if we speak about triangles, we need to look at the highs and lows. In case of triangle, we have here higher highs and higher lows. And in case of triangle, how would you call it? Is it descending or there's no flat resistance, no flat support. This is not a triangle. And it's very important for you to see the difference, because this formation is called a wedge. And believe me, it's a big difference between a triangle and a wedge in way of trading. Because in case of wedge, the breakdown, in case of an ascending wedge, the breakdown appears, I believe, 75% of breakouts from an ascending wedge is down. So when we spot a wedge on the market, we have a big chance to have a good trade down. In case of a descending wedge would look like this, that we have two lines coming down. So this is not a triangle, because triangle needs to be like this. This is a descending triangle. This is an ascending triangle. And this is a symmetrical triangle. Those are triangles, but this is a wedge. Someone asks me here, okay. Moment. I will just close this. So you see the difference. In triangle, we have one is flat, one is falling. One is flat, one is falling, and here we have both falling. And here they are heading in the same direction. This is not a falling one, and this is not a falling one. So this is the big difference. Sorry, I need to add someone. Someone raised a hand, and I must find. You write this is a flag. I will say it can be treated like a flag also. But in case of flags are usually parallel lines here. So they are kind of a channels. I call it a wedge. And if there'll be interest, we can make a webinar regarding how to trade a wedge. But now I believe it's good if you go to samples from the real market. And on the real market, we can check if we can spot those patterns. So let's go now to the real market. Of course, before I would mention that if you open an account, you can get some bonus. And also the traders who make their first deposit or replenish an account, they got also a 50% bonus. It means that if you pay 100 on your account, you get 50 extra. And of course, this is the contact where you can make, where you can send your, where you can apply for those bonuses. But now let's go to, and remember that tomorrow we have an important event. Those are payrolls, but I'll come to the payrolls in a moment. We will leave now our webinar and go to real market. So just a moment, the real market is here. And sorry, now we can take a look at the charts and come back to the figures or to the patterns we're discussing. So this is the wedge I was showing you a moment ago. As you see, the wedge is giving us two lines. Both are climbing, okay? But here we have a triangle. This is a triangle because we see that we have a flat resistance and a slopey bottom means support. And look what happened. This is a real market from now. This is Japanese yen, dollar with Japanese yen. And look what's happening. This is a 4-hour chart. Okay, we have some more information here. Not seeing the screen. Sorry, once more. I will see. Sorry. I need to change this screen. Okay. Now it's okay. I have to drink something. It's yeah. So is the screen okay? Do you see the screen now? Okay, fine. That's fine. So let's continue with real market, real samples, real trading. Here again, you see, once more, we come back to the wedge. This is the wedge. And the difference between wedge and a triangle is such that in the wedge, both as well as resistance, as well as support, they are climbing up in case of an ascending wedge, because we have also wedges which are falling wedges, and falling wedge is just turning to the down, to the bottom, to, let's say, to the south. So once more, we have a typical wedge here, and as you see, it was perfectly drawing such a move up and down, up and down, up and down, once again, up and down, and then definitely they broke down. Why we shouldn't enter such a pattern before the breakout? Because we would be fooled many times here. We would be fooled many times. If you would believe that we are breaking to the top, they return. We believe they will be breaking to the bottom, they go up. We would lose a lot of money here. But when the breakout is done, then we can enter. Why not? And usually, if we have a wedge, those declines are very strong, very dynamic. I see something here. No mouse? Yeah, now it should work. I believe it's working now. Because, you know, when I'm using the pen, then the mouse is maybe not working properly. But let's continue like it is. So once more, this is the wedge. Some participants more. And this is the triangle. So this is the difference. Here we have a support and resistance going in one direction. Here, in this case of this triangle, we have a typical triangle, which is a ascending triangle, it's growing triangle, and they break down to the bottom. And now what's important here, I'll make it bigger. This is an actual chart from dollar to Japanese yen. We see the breakout from this triangle and then continuation. This is a typical, in my opinion, a typical breakout which gives two chances to enter. The first chance is when the market is retracing So we could enter here a short, why not? But even better is this situation here. Look how perfectly they retested this from the bottom. Okay, you go down, you make a retest and follow down. So if you would be late and you wouldn't enter here, entering here was not a good idea. After such a big candle, you shouldn't enter the market. No, it's not TradingView. It's the chart from CCI. This is the platform CCI trader, but it's very similar to the TradingView. Yeah, it is. So once more, a triangle, and no doubt that the market is going up and down, and at the end the market is leaving the triangle, and we have two chances to join the breakout. We can join the breakout here, or if we were too late, here it's a bit too late to enter, better to wait. Maybe there'll be another pullback and enter somewhere here. Look how perfectly they retested this broken support, which became now a resistance. In this moment, we can see how the prices of different instruments can behave in such a very precise way. So this is a triangle which we know this is the ascending triangle, and this is a live sample which is going at what's happening on the market. Now let's take a look for another sample for another triangle. Let's go to gold, because I know that many of you like to trade gold, because we are trading contracts for difference, which is not buying or selling gold, but buying or selling contracts. But let's say that we are buying gold or selling gold, because the gold is paired with dollar. So this is the price in dollars for 1 ounce. So 1 ounce costs at the moment about $1,700. As I know, in South Africa you have some mines digging for gold, so maybe you are more familiar with gold than I am and the prices of gold. So let's search for a triangle, and I see here a symmetrical triangle. The symmetrical triangle looks like this. Okay. This is the, how we call it, support of a triangle. And here we have resistance of a triangle. Of course, we can draw it in many different ways, because it's not a pharmacy. We need to know that the market will not touch correctly, but plus minus, let's say, few pips on this side or this side. But now we see that we have a typical triangle, symmetrical triangle. When we see that if I admit that we have a typical triangle which is moving from one line to another. If I would draw it, I will draw it like this, like this, like this, like this, like this, like this. And now the question is, will they break down or will they break up? And what I can say, oh, sorry, once more. Okay, so this is the situation at the moment on the market. And the question is, will they break up or will they break down? In my opinion, we have a big chance that the market will go up. After breaking this resistance of this triangle, the possibility that they will break to the top is bigger than to the bottom. Why I believe in this? This is what you asked on the chat. we have a bullish trend here. And you asked me if analyzing the trend can give us an idea what can happen with the triangle. Yes, if we see such a strong move up, we can expect that the breakout from this triangle will happen and this triangle will be broken to the top. That's why I believe that it's important to watch what's happening on this line. So when I remove the pen and make it maybe a bit flattened, believe me, breaking this level can give a boost up. Of course, we need to be aware that they can break also to the bottom. Nobody can assure us that they will break to the top. But if it happens, I would go long. I would buy gold. So it's a good idea to watch it and react in a proper moment, not to get too late. And what can you treat as a breaking out, a level, and that you say, okay, this is a confirmed breakout. For me, a confirmed breakout, it means that the breakout was done, is when a daily candle, so I change to a daily candle. If a daily candle will break this small triangle here, you see how small it looks when we look at the daily candles. It shows nearly nothing. But what I believe, why I believe in the break to the top, is those two long wicks. As you know, a candle is built of a wick, a body, and the upper wick. This is a lower wick. This is the upper wick. Maybe I'll make it bigger so you can see it here. A candle is like this candle. This is a pin bar. But this candle, typical candle, is built from a lower wick, body, and an upper wick. When we see that the lower wick is so big, it means that the market is not accepting those prices here. So all those prices here were enough low for the market to buy. So where you see a wick, we can say this level of price is sold out, definitely sold out. And they want to buy more and more. That's why if they break this level, I am bullish on the gold, but I would wait for the market to break it. And a breakout of a level means that the daily candle, because this is today's candle, this is Thursday's candle, it needs to close over this level, not below, because if below, nothing happens. Sometimes it can happen that the market will go out and return back. So what's important, after the New York session is over, you need to check if the price closed over or below. If below, you do nothing. But if they close over, you can think about buying gold. What's important, tomorrow, let's look at the calendar. I have the calendar here. Sorry, I need to change to this. Okay, this is, I believe you see the calendar at the moment. So tomorrow we have very important data here coming. This data, non-farm payrolls, can shock the market. We are expecting that the payrolls will change. There will be 2 million of unemployment people adding to the market. So 2 million of people probably lost their work in last month. And if it's confirmed, it will be not a good sign for United States dollar. So I believe that if those payrolls are they may be even worse. They can be even 3 million. There can be even 3 million people losing the work. I don't know. Tomorrow we'll see. But remember, tomorrow, it's 21 hours from now on. Those data can shake the market. That's why maybe during those data, the market will push the gold up. So I would be careful, but if you have an account already, wait to that moment. And if you see the market spiking up, probably you can enter a buy here order. So you can make a buy order, click on the green and go up. Of course, you need to look at the volume you are buying, because it must be properly suited to your, must properly suit to your capital. If you are, I don't know what are the levels on which you are trading, but I wouldn't start with a big volume, maybe a smaller one. I take a look, what is the smallest one? So I would start with the smallest possible amount. And if they are going in my direction, I would be adding. But believe me, this line here for tomorrow can be very important. If it's broken, the levels of for gold, another level where the gold can reach is 1800, so $100 higher. And that's why I started today's webinar with triangles, because I knew that there's a triangle on gold, and this triangle can be broken out tomorrow. Maybe even today in the night they will close. But what's important, daily candle must close below or over a triangle. Then we can start trading it. And tomorrow the payrolls, it's the last day of the week. You need to be cautious that market can make some crazy moves, ups and downs. But I believe that future for gold is optimistic, what means that if we saw such a strong trend, the breakout from here will follow up. I don't know if it will happen, but I hope that I'm right. But I never enter a triangle before the breakout was done. If the breakout will be done, then I will enter. Then I will probably make some buying here. Okay, so this is what I wanted to show you regarding the triangles. Now maybe you have some questions. Then just write them down, and I'm ready to answer them. If it closes down, of course, as I mentioned, the triangles, especially the symmetrical triangles, are bilateral formations. They can break up, they can break down. That's why wait for the market to make the decision. Let them break it and then enter. Because it can happen that tomorrow payrolls will be very good for United States and the gold will start falling. So then just join them when they will be falling. Forget about buying, but what I mean, first we need a break up. And when I'm looking at the price action here, I see that this level here is sold out. So probably the price, all what was here at the price between 1663 hundreds or 1686, it's sold out. So this price was enough interesting for the market to buy. And if the price is coming down, again, the buyers will enter. But when they break this, this will be a trigger of another strong move. Coronavirus cases, okay. This is another problem. I hope that we will manage to survive and everything will come back to normality. So, okay, so this is, if there are no more questions. A session for beginners. Of course, it depends on the CCI. If they ask for a session for beginners, no problem. Then we can show some basics for trading. What's a candle, how it's built, when can we treat this candle as a decisive one. So, this is, let's say, this is a typical pin bar here. If you don't understand what's a pin bar, then I can explain. Pin bar is built of a very long upper wick, sorry, and a shorter a lower wick, and a small body. It means that all prices here were not accepted by the market. The market didn't want to buy on those prices. So such a pin bar is means that the price was falling. And if we see such a pin bar on the top of a move, it's a very strong signal that the market will move down again. So when you open your charts and you see a pin bar, you can start thinking about selling, because those are pin bars which we call bearish pin bar. It means that the market is going to fall. Even if a pin bar, even if you find a pin bar somewhere close to the top, like this one, even it's green, it doesn't matter. The matter is the size of this wick. The longer it is, the stronger declines we will have. No mouse again, sorry. So once again, yeah, this is a pin bar, okay? It's a very specific bar. I was having a short webinar on Monday regarding the pin bars and candle formations, bullish candle formations. So I am not going to repeat it now, but if there is an interest, just write to the CCI broker. Maybe they want us to repeat it, no problem. Because last time we had some problems with hackers. They were spoiling our session strongly, and we couldn't finish it properly. So, but still, this webinar we can repeat it in a correct way. And of course, just write the messages. Just ask the broker, and probably he will offer you any type of webinar you would like to see. So I believe that our time is coming to the end. There are no more questions, but of course the question about the session for a beginner, I believe we can do it. But of course the broker must find time, some good time for us to make such a session. I hope that you understood some things of those in a proper way. Remember, triangles are important in trading because they give a lot of opportunities to trade. And if we take a look on the daily chart, it looks maybe not like so easy to spot it. But when we go, let's say, to a 1 hour chart and make it smaller, we can see that this triangle is very nicely built, and breaking from this triangle will give us a big, nice opportunity to trade it. On the 1 hour chart, we can even see that we can move it a bit like this, a bit like this. Okay, and now breaking this is very interesting situation. Don't trade before the break is not down. The breakup must happen, and it can happen only, it will be confirmed by the market when the daily candle is closed over. Then you can start thinking about going long or by buying. How to get bonus? Yeah, we can come back to the to this chart. Sorry, I will just change the screen. Okay, I believe you see it. Here's all is written down. So the rules are very simple. You need to open an account, so you get this $50 free. Just for education yourself, just to check how this platform is working, and so everything is here in this offer here. And I believe that if you write a mail to support CCI traders, then probably all the questions will be answered here. So it was nice to see you. I hope that you find those things which we discussed interesting, and see you in close future. Maybe we'll make a webinar for the beginners. Maybe we'll make some more interesting subjects. All depends on you. So in terms of theory, I showed you some examples on the real market, and now I can say thank you very much for the meeting, and hope next time we can discuss more about the markets and technical analysis. Thank you very much.